Hey, what's up, everybody? It's your guy Frank from over at Cobbs Capital.
What's good? What's good? What's good, guys? It's your boy Daeza from over at Cobbs Capital.
And you guys, you know what it is. You know what time it is. You've heard the news. I know you guys have seen the reports.
We heard it, man. We heard it. Got some lemons.
Oh,
Making
yes.
some lemonade.
Yes. It's that time. You already know. Got my stand out. AMC time, though, guys. In all seriousness, it's AMC time. Know what it is. Are we moonbound? I guess we will find out. I guess we'll see.
So I heard, Frank, that there was something called the AMC Short Squeeze. Can you tell me a little bit about what that is? I'm not really sure. What is a short squeeze?
Good question. Good question. All right, Daeza. So we're going to go over what a short squeeze is. So I'm going to do this first. We're going to go over the definition, little technicals, and then we'll go into, the actual chart. So definition of a short squeeze is basically you have short sellers and then you have the buyers, of course. You naturally have two sides to everybody. You have buyers, sellers.
So the buyers, you got buyers,
Mm-hmm.
you got sellers. That's all. Okay, yeah.
Exactly. And basically, short sellers, it's almost like a little bit of reverse psychology, I guess, if you will, because it's like a seller in general, it could just be anybody, like, just trying to sell a shares, trying to sell their options contracts. Short sellers.
But you have to be a buyer first to be a seller.
Indeed. You actually have to own equity to be a short seller, or you have to have enough collateral to be a short seller. Not everybody can be a short seller, guys. You got to have deep pockets for that.
Big whales, big whales,
It's
guys.
the whales, it's the Wall Street, it's hedge funds. That's who's a short seller. It's not the average Joe just down the street.
You dude on Robinhood, you not no short seller, bro. Okay?
Yeah. Unless you got $1 million in your Robinhood, which I would not. I don't know why you would have that,
you put
but
$1 million in Robinhood, you bugging out, bro. I'm not gonna hold you. You bugging.
Don't know why you be doing that, but yeah. Basically, short sellers, guys. This is gonna be it's the large hedge fund. The Goldman Sachs, the Bridgewater Capitals, all those people. You already know who they are. You don't need to worry your mind about that. That's what I want to say.
Okay.
So
anyone could be a buyer.
Anyone can be a buyer, yeah. Because also too, buying is so accessible now. So, for instance, you can go on Charles Schwab, you can buy a fraction of a share for just $5, or you can go on Robinhood, buy a fraction of a share for $1. You can even go on Cash App. I think Cash App. I know most of you guys, if you're international, I know you guys don't have Cash App. Just imagine if it was like a PayPal. A little bit different than PayPal, but that's basically what it is, and it lets you buy fractional shares of any stock you want. So I could literally buy $1, $2 worth of Amazon, right? And Amazon's over $3,300 per share.
You can do that on Cash App now.
Oh yes, you can definitely buy. You can buy stocks on Cash App. You can't. It's not just
the crypto.
Oh no. You can buy. I don't know.
And you can buy fractions.
You can buy fractions now. I don't know. I could be wrong on this. I don't know if it's every stock. Of course, every exchange has a little bit different. Like, for instance, Robinhood doesn't have every stock in the world on their platform. Charles Schwab, TD Ameritrade, they don't have every stock in the world on their platform. So I'm not sure, because Cash App is a little newer to the stock game. I don't know if they have every stock, but they have the main stocks that you need. Like, they're going to have AMC for you, GameStop, Tesla, Amazon, Apple. They're going to have the main stocks that everybody's talking about that you might want to put into your portfolio, especially if you're a younger person. So, yeah.
So now we know what the buyers and sellers are. What the hell is a short squeeze?
A short squeeze basically comes from, like I mentioned, there are buyer sellers, but there are also the short sellers. The short sellers are basically buying up shares to be able to sell them short in the hopes that the actual price of the stock goes down and down.
We talk about puts?
It's similar to puts.
What's the key difference?
All right, guys. So we're going to go into a quick explanation of the difference between puts and short selling. Basically, with puts, you're betting that the stock will go down in price. So any stock that you want, if you think it's going to go bankrupt, if you think the management is terrible, you say, I know this stock is not going to be performing, making any type of profits. It's the worst stock out. You can get a put option, and as it falls down in price, you make money. So you collect that money as it heads down. Woo. Now, it is a little bit more technical than that, of course. So just to, kind of, show you guys real quick. So let's say you have stock X, right? So we're going to say we have stock X. Stock X, we'll say $100, right? So stock X, 100 right there. So if stock X is $100, you're obviously going to say, okay, well, what do you think is going to go down? Because you're not just going to say zero. No stock goes to zero, right? You're going to say maybe it'll go to 60, maybe it'll go to 50, maybe it'll go to 40. So what you can do is say, I'm going to get a put option. A put is basically spelled P-U-T, like this. Put, it's a put option. Excuse the bad handwriting. I'm not so used to it just yet. So basically, you're going to get a put, and you say, from $100, I think you to go to 80. So maybe you say, I'm going to get a put option contract, and the value of this put option contract will be at $80. Or as we like to say in options trading, the strike price will be $80. So as it goes from 100 down to 80, as you can see here, you make money. So if it goes from 100 to 90, 100 to 85, and even if it drops well below that 80, you make money. And a lot of the misconception about options is, oh, does it actually have to get down to the strike price? No. If it goes from 100 down to 95, 90, the next day, the 3 days afterward, you will still be making money on your put option contract. And that's why I love puts. That's why I love options in general, but that's why I love puts. So that's basically how a put works. And also, too, when you're looking at the put options, you should keep in mind they do have an expiration date. So, they expire, all options contracts, they will expire each Friday. So do keep that in mind if you get any, options, just buy some time, like go out to the next week, next month, etc.
So 80 is the strike price. So if for stock X, we think we want to put for 80, 80 would be the strike price we're looking at.
Exactly. It's basically like that's how you can choose. In theory, you basically choose your strike prices based off of where you think the price is going to fall. Like if I don't I'm not going to say, oh, I'm gonna get a $20 strike because I don't think stock X go from 100 to 20 that fast. But 80, something reasonable, guys, is basically what I'm trying to say. Something reasonable value, it'll go down. So if I think 80, get the 80 contracts.
Word.
All right, guys, and now for the short selling. What is short selling? Basically, short selling, you're borrowing shares, you're borrowing stock, and you're selling it to the other retail traders. You yourself need money to do it, of course. Like I said, you got to be breaded up to do it. Not just a regular person about to sit here and short sell.
Because it's got to be on collateral, right? Like pretty much
exactly.
You got to put something on collateral. You got to put something up to be able to borrow that shit.
Yes. Oh, yes.
Do you?
Huh? Oh, no. You do. Basically, guys, let me paint a picture for you real quick. Let's say you have a plug, right? Now, your plug, he deals in apples. Granny Smith, the yellow ones, the red ones. I don't know what the red ones are called. I just know what Granny Smith are called.
The Golden Delicious.
Yeah, Golden Delicious, right? So he has all the different apples. And you're seeing that this is demand for apples. So what you say is, okay, you go to your plug, you say, okay, Mr. Apple, Johnny Appleseed, Mr. Appleseed. Wait,
very important. There's a demand for apples, but you know that there's some worms coming out that love apples. That's gonna take the industry.
Look, it might be. Think about this, guys. Winter could be coming, so that means that the apple's not going to be growing during the winter. There's a certain type of worm coming out. Certain disease might be hitting apples. So the price of apples, even though there's a high demand, the price of apples is going to be dropping real fast. So that's why you're trying to get in and make a quick buck. Because you're not short selling all the time. You're just short selling when you know something's about to happen, when you know the stock is going to decline. All right? So again, you go into the plug. Let's just call him J Appleseed, right? You go into the plug, you say, you have your inside information. You don't need to explain this to him. He already knows what the deal is because you have to borrow from him. So you say, I'm going to borrow, let's say you borrow 500 pounds of apples, right? Now, don't worry about the actual number. Doesn't matter. Just say you borrow 500 apples, whatever. Now, again, the demand is up for all these apples. So you go out to your neighborhood, you're selling them for $2 a pop. You sell them to your neighborhood, sell them at the soccer games, you sell them at the football games, you sell them everywhere you can find them. You're even doing candied apples, right? You're selling candied apples at a premium of $4. People eating them up. But what happens, like I said, winter came along, apple shortage, it's starting to destroy the apple crop. So the price of apples going down. People don't want them, or the worms are coming around. Now apple quality is going down. So now, let's say you bought all those $500 apples, those 500 apples for $1, right? Let's say those 500 apples, you bought them for $1, and now because of all this stuff going on in the ecosystem, those apple prices drop down to 50 cents, right? So now because they dropped down to 50 cents, even though you predicted it, you can go to these people and say, okay, you was buying it from me for $4 here, $8 there, but now I'm only going to pay you 50 cents. That's what it's worth. So now you're making not only whatever you sold, but you're making that 50-cent profit for every share that you buy back. So, of course, it comes time to pay the plug back. The plug don't care what time it is. He don't care if it's morning, noon, night. He don't care if your granny's sick. He don't care what's happening. You pay him back because you borrowed it from him. And that's how it happens with the short selling, because you borrowed it from the brokerage. They're the plugs.
So let me stop you right there. So you're telling me that, right? So let's say they weren't necessarily eating apples, right? Let's say you're selling it to other apple plugs Or even retail investors, you when you go out to the grocery store, you'll buy like 10 apples. You don't just buy one and eat
that's
one
true.
a day.
Yeah, that's
right?
true.
You buy like 10 apples, right?
Mm-hmm.
Now, right? Let's say you're a kid and you make an apple juice stand.
Okay.
Right?
Okay.
So now you bought all these apples from you, the short seller. You bought all the apples from the short seller to start your apple stand. But now the demand for the apples went down, and you got to recoup your losses. So you want to sell the apple? Like, hey man, you come back to the guy, the short seller, and you be like, hey man, these apples not moving, bro. Let me sell them back to you. He bought them for $1.
Mm-hmm.
But I'm only gonna buy them back for 50 cents.
Yep. And every apple you buy back, get them back for 50 cents. That's exactly how it works.
Interesting. I'm not. So where's the point where you make money?
The point of making money is.
So you sold it for $1, right?
Mm-hmm.
But you don't own the apple.
Nope.
So so all that money has to go back to the plug.
No. Again, when you borrow, right? Again, this is why I say you have to have money. You have to be redded up, because the plug's not just going to lend to any like person that's not credible. So the brokerage, right? Let's go. We're actually going to go back to actual stock real quick. The brokers, they're not going to let any just random person with $100 in the account sell short. You actually have to have money. You have to be accredited. Have to have experience with them. So if you're going back and let's say you borrow, you do the short selling, right? You're only going to be paying a percentage of what you buy, because the actual thing is the brokerage, they're only lending you a certain amount of shares, and they're only saying, okay, at this price we're going to lend it to you. It's not going to be like, okay, well, if you make a profit off the shares, this is what happens. Because say for instance, if you didn't make any profit off of it and you just held those shares and then you sold it back, you'd only be in the percentage that they charged you for those shares. So the percentage that you're paying back the plug in the Apple example is only how much he's charging you for having borrowed it in the first place. He's not really charging you for the difference in between that you're making. So minus the actual percentage you have to pay back, you keep the rest of that profit. So let's say for the apples, right? It was $1 per apple. Now the 50 cents, you're buying them back at 50 cents. So you're making 50 cents per profit. Let's say you have to pay the plug back 20% or 20 cents, 30 cents.
I get
exactly,
it now, right?
Exactly. So now you keeping that other part.
So you borrowed it, you flipped it, you just got to pay the plug back.
Exactly. You're only paying the plug back. Because again, stock is like the stock
because
brokers,
you're not
paying
the plug back in money. You have to pay them back in the stock that you borrowed.
Exactly.
So if you had apples, the plug. If you had apples, imagine having to give back the apples that you make the apple pie with. Like you have to give the apples back. So you're not using the apples. You're just selling it and then buying it back.
Exactly, because the plug, he's making money regardless of what you do. He has a lot of different stuff going on in his life. He just wants his apples back. And he just wants his percentage for having lent you those apples. He doesn't care if you make profit off those apples. He just wants his apples back, and he just wants, whatever happens, the other percentage. And that's how it happens with the stocks. The brokers, they just want their stock back. They don't care what you do with it, if you sell it for lower, if you sell it for higher, because that's the other case, too, we didn't get into. Imagine if demand skyrockets, right? Not only does demand skyrocket, imagine there is no winter for the apples. Imagine there are no worms. Now, that's where the short squeeze comes in, because now you not only have to play the plug back, but now you have to give them back the apples, and you have to buy them back at a higher price than what you bought them for, and you have to pay that percentage on top. So now you just...
you in hell.
Oh, man. Oh man, he's getting it. Hey, it's coming at you from all sides, and look, that's how short squeeze happens. Because eventually you just have to bow out, duck out. It's like, I took an L on this. It's not going the way I thought it was. That's when we get
into the short squeeze when it's like.
That's when we get into the short squeeze.
Because you are a short seller. We're gonna squeeze you for everything you got.
Oh yes, the retail, because they're gonna drive the demand up. And again, guys, that's why I say you have to have money, because you can't just go in there and just borrow money for nothing, or borrow the shares and borrow the apples for nothing. You actually have to have money, so it has to be collateral put up. So if it does go against you, you have to be able to afford that loss. That's why not too many people do it. Only the people who have a lot of money. Again, hedge funds, Wall Street type guys, millionaires, all those people. So the short squeeze, like I was just saying, it occurs when basically it goes the opposite direction. So if the demand increases and the price doesn't drop down like you thought it would during a short sell, then you're going to have to pay back the price to the plug. You're going to have to actually pay that percentage, whatever that was, and you're going to have to buy back all the shares, or all the apples in this case, at whatever price that the actual retail people are selling it for. That's a short squeeze. And because people are noticing, oh man, the middleman here, he's losing money, he's having to duck out because the price is going up, guess what's going to happen to all the other short sellers? They're going to start squeezing them too. They're going to have to start bailing out. They're going to have to start bringing out their apples. They're going to have to take the L on their apple patches and trees too. So that's how short squeeze happens. The prices goes up and up. So $1 today for the apples, $2 tomorrow, $4 the next day, $8 next week. That's how it happens, guys.
So we thinking that these Wall Street guys are really panicking.
Yeah. When the short squeeze happens, panic sets in. I can tell you that for a fact. When a short squeeze happens, panic sets in. Can you imagine being in a position where, let's say, you sell like with AMC, right? Last time AMC short squeeze, it went from what? $11, $12, all the way up to like $70. Imagine thinking that it was going to go down to $5 and it goes up 70. That multiple that you lost is far greater than the multiple you would have made.
And y'all wonder why Vlad was telling. Y'all wonder why Vlad kind of.
Exactly. Or think about it, even with GameStop, it doesn't have to be AMC. You saw the GameStop one. GameStop was like what, sub 100, and went up to over $400 per share. All those short sellers, imagine having millions of dollars staked in a short position and it just 4X's in the opposite direction of what you want. I'm telling you, they woke up with wanting some violence that morning.
Robinhood, like everyone, like, hey man, that's what happens, man, guys. Like, y'all were mad at Robinhood for coming out and saying, "Oh, sorry, we gotta shut down the servers." I bet there was worse things that happened. I bet they had a.
I can tell you that, Robinhood might have had shares short themselves. They might have never expected a number of things could have happened because Robinhood, they slowed up progress real quick. As soon as they saw it halt.
Someone ended up in the bottom of the river, man.
The cinder blocks on the feet. Yeah, it was not a good day when that started happening. No.
Oh my goodness. So that's pretty interesting, So I get what a put is, definitely short selling and a short squeeze, how it applies. So what's next?
So next, guys, is really just to kind of look at the charts. Just do a little bit of TA. A little bit of TA. Actually, before I do TA, I do want to touch on these share statistics. Not going to get all the way into it, guys. Just want to update you real quick. So we were talking about
these numbers are scaring me, bro.
They look scary. I know they look scary. They scare me too sometimes. I hate looking at these, but you got to do it. When you're looking at the technicals, right? Basically, when you're looking for a short squeeze, main thing you're looking at here, short ratio. And then, not all that. You want to look at the short ratio. I don't know why my mouse did that, guys. Short ratio and then short percentage. So a float or of shares, it doesn't necessarily matter. The reason you're looking at the short ratio is, again, because you're looking for how much interest there is in shorting it. The higher, the Wall Street people are, the more people are looking to short it, the higher that ratio will be. So that's what the short ratio basically is.
What's the highest the ratio can get?
It just depends. So there's no exact.
Well, what do you consider a high ratio?
High ratio is at least 5 or greater. So if it's less, and again, this is also a good thing too, guys. Keep that in mind. The lower the short ratio is, that's the more bullish the stock is, because that means that's not that many people shorting the stock. So the short ratio would at least have to be 5 or greater. When you're looking for a short ratio, you're actually just looking for the actual shares outstanding, right? So this is basically how many shares there are altogether, or you would actually just be looking at how many shares are being traded every 10 days, every 30 days. That's all you're looking at. And then how many shares are short. This is how many shares of the actual total that people are actively shorting as of, as you see here, August 12th, 2021. They're shorting.
Well, you go for it, finish.
Oh, yeah. So as of August 12th, 2021, out of all the AMC shares, so we have 513. There are 13 million, that is, not just actually 513. I hope that will go without saying.
What's that M mean?
Million.
I'm just kidding.
So they got 92.42 million shares they're shorting, and basically the average volume. So this is how many shares of AMC are being traded every 10 days or so. So basically, if they're trading 90.88 million per day, they're only shorting 92.42, which is a little bit above. That means the short ratio is 0.98. But again, that's not all the shares that they have. Like some people with AMC, they don't even trade. Because think about it. A lot of the apes, they just buy and hold, right? They don't trade every day. They might be buying more.
Oh, that's in the 10-day.
Selling. Exactly. That's just the 10 days. So this is just everything. This is not overall. This is just 10 days. So if they're just buying and holding, that's not going to register for the average volume being traded because trading is buy, sell.
Is that how all short ratios are calculated by the 10-day?
Usually it's actually 30-day. They use it for 10 days. Basically, the shorter the time frame, the more accurate you can see. The more accurate of a representation you could get. Because imagine having to wait every month just to get a short ratio.
So would you be able to check this out on Robinhood?
Yeah, I think I don't know if you could actually check it out if you don't have Robinhood Gold, but even if you have Robinhood Gold, I don't think you'd actually be able to do this. You'd actually really need the entire financial drawdown. But again, Robinhood is more of like just a nice little retail, great UI. Probably need to go to TD Ameritrade, Webull, something like that to get all this information. I don't think Robinhood actually, shows all this. This is quite a lot for Robinhood.
TD Ameritrade and Webull, guys.
Yeah, TD Ameritrade, Webull, Charles Schwab, basically any brokerage besides Robinhood.
The McDonald's of trading. There you go.
That's a quick, fast. It's nice. Sometimes it's good, sometimes it's not. You take the good with the bad. That's what it is. So yeah, guys, that's like I said, that's a short ratio. So you see that 0.98. They're basically taking the average 10-day volume and they're dividing that by share short, and that's going to give you a short ratio. Again, a short ratio of 5 or greater is usually going to be showing you or indicative of a short squeeze pending, but if not, then it's still great because it's bullish. And then the short percentage of the float, or the short percentage of the shares outstanding. Again, shares outstanding 513 million. We only have 18% of 513 million shares altogether that are being shorted. So what does that mean? The less this percentage is, the less likely it is to squeeze. You really want to see 25, 35% for short percentage. If it's not there, then it's probably not about to happen so soon. It could, but it's probably not going to happen so soon.
All right, for sure. So we getting into the TA. What we looking?
Oh yes. So that's TA. So guys, just keep that in mind when you are looking for any type of short squeeze, share short, short ratio, short percentage of outstanding shares. That's it.
Hey.
And then guys, here's the TA. Got the daily chart up because when you're looking for a short squeeze, you want to have most macro time frame. You're not going to go to the weekly. Weekly is going to give me back to I don't know when it IPO'd almost. So I'm not trying to look at no weekly chart, guys. Daily chart is that suffices. It's more than good enough. So if we're looking at it, right? Again, I always tell you guys, first thing you look at, RSI. You're never going to have a short squeeze where the RSI is just, extremely overbought. Of course, it can continue to go and go if the shares are really being squeezed and the shorts are really being gotten out of there. But as of right now, it's starting to look like we're picking up some bullish momentum. So right now, bottom left-hand corner, RSI is around 63. So if you guys saw over there. So we're constantly rising on the daily chart. And the last time AMC made its run up, it got to a RSI of 96. So again, we're at 60. It has about 30 more points to climb to get up to that 95, 96 area before we actually get to a very peak and overbought level for AMC.
They're squeezing the hell out of these guys, man.
Oh yeah, trust me, the AMC hoes, they ready. I seen the apes, they ready. They got the diamond.
They will not let the movie theaters die, man.
Oh nah, they're not. Hey, they bringing it back. AMC, I think they had a record-breaking quarter. Actually, this is the earnings right here. 24% beat. Yeah, y'all helping AMC rise from the dead, like that song where he just rose up from the dead.
I love it, guys. I love it, yo. Keep doing your thing, man. Put pressure on these brokerages next, man.
Oh, yeah. Put all the pressure on them because that's just the more money y'all are going to make. So then here, guys, this is where we currently are at with AMC, right? So every candlestick is a day because it's my daily chart. So, the next candlestick won't show until 3 hours, 42 minutes. So right now, we're above support, a very decent support level. Again, rising on our side shows we have some good bullish volume as we see. Yesterday, a lot of bullish volume. Today is a little bit less, but, you can't expect the stock to rise every day. Currently over that support at 42.04. So for me personally, I would expect AMC, especially given all the momentum, everybody looking to get in, everybody buying it up. I would expect AMC to at least get to 52.64 very soon. And if it can get above there with enough volume, then I'm not going to say sky's the limit, but retesting 52-week highs, I'll definitely say that's in question. If it gets above 52, guys, once more, above 52.64, I think it has a clear moonshot to 72.68. Couple that with the FOMO, couple that with people trying to buy in, couple that with all the apes already holding. I don't see how it doesn't get to 72.68 if it gets above 52.64 with all the bullish momentum we're already seeing. Plenty of bullish indicators going on. Good volume. We're above all our EMAs, so all that's looking great. RSI rising. Ooh, Mwah. Easy money to the upside with AMC. Be patient. Not gonna have it today, not tomorrow, but I see it happening.
All right. You got a date slate?
A date slate. I don't really like doing predictions like that, to be honest. But if I did have to give a date for AMC to rise, this is what I'll say. I don't know when it could hit 72 because that just depends on the overall market, and I can't predict the overall market. But I can say with this momentum, I would say it's very likely that we hit 52 at least by the not mid-September, but like let's say September 9th, 10th, 11th. I can see us getting up to 52, and that's conservative. I'm not going to get overly, aggressive with my prediction, but at least the 10th, 11th.
It seems like they won't go away.
Oh no, it's not going away. And
they won't go away.
And look at this. We bottomed out right over here on the 5th of August. We bottomed out again on the 11th of August. It didn't even get down to the support level. Didn't get down to the 200 moving average, which would have definitely been bearish if it crossed below. So the apes, they bought that right back up. So it's headed right back up. So yeah, it's looking very, very bullish, guys. Like I said, we're already over the EMAs, already looking bullish according to volume and just the actual price trend, price direction. Like I said, I would expect at least by September 9th, 10th, 11th, around that time for us to start hitting that 52 range on a conservative estimate, guys. So we'll see what happens. And above that 52, guys, like I said, sky's the limit. And I know you see that resistance point right here around 68, but once it starts getting back up to all-time highs, people just going to start FOMOing in. That's the case with everything. Like, who thought when GameStop was 200, it would have immediately doubled to 400, right? So who's to say once it gets right up out of that 60 area, it doesn't just shoot straight up to 72. So be on the lookout, guys. If you're not buying, this is what I say. You don't need skin in the game to, see a short squeeze to be part of it. I mean, it would be nice to be a part of it, but, not everybody needs to buy. But at least keep it on your watch list so you can see what happens and you can understand what a short squeeze looks like when it does occur.
That's about it, guys, man. I hope you guys learned a lot. We're going to be coming to you with videos a lot more often. So make sure you hit the subscribe button, hit the bell,
of course.
like the video. Do all
you already know. Turn those notifications on. You already know. He already said, turn the subscribe button on, hit that, because you got plenty more content on the way, plenty more videos. And, of course, it's not just going to be about the stocks. We got the crypto part for you, too. And that's the Daeza specialty right there. I can't hold you. This man's a true expert. Hey, y'all gonna want to be here for this. That's all I gotta say. Be prepared, get your notes out, set your alerts, set the alarm, tell the missus, hey, at this time we gotta go over and watch that Cobbs Capital video. So, hey, if you want to get your money up, Cobbs Capital the place.
Guys. Cobbs Capital is just a place about making money. So we're doing NFTs too.
Oh.
If you guys know about that good art, man.
NFT.
You're gonna want Hey, we got a new series coming out for you guys. Don't worry, it's coming soon. We're gonna make it nice and succinct for you guys, bro. We're gonna get you guys lit. We're gonna get you guys your pockets filled. So make sure you stay tuned, man. Make sure you stay tuned.
Stay tuned, guys.